All right, in this class, we're going to be talking about down payment assistance programs and the different programs that exist that help home buyers come up with the funds necessary to purchase a home. And let me just start with a quick disclaimer. Whether or not you're struggling to come up with your down payment, you should and need to know about down payment assistance programs because, quite simply, you could be leaving thousands, if not tens of thousands of dollars on the table by not knowing that these programs exist. And a quick disclaimer as well, which is a lot of lenders don't know or don't care to educate themselves about down payment assistance programs. There's a couple different reasons why, but primarily it boils down to two things. Number one, you have to receive a extra level of education and certification to offer down payment assistance programs for the most part. And so it can be, time consuming, and it can be a pain in the neck for some of these lenders to do it. So quite frankly, a lot of them just ignore down payment assistance programs altogether. And number two, a lot of down payment assistance programs negatively impact the compensation of the lender, meaning the lender makes less money if they offer a down payment assistance program, right? So that impacts the bank's bottom line as well as the bankers or the loan officer's direct compensation. So for that reason, unfortunately, it falls on you as the consumer to educate yourselves. But luckily for you guys, you signed up for our course and we're going to educate you on a couple of our favorite programs right now that exist that a lot of borrowers are choosing to use. Let's start with our favorite type of down payment assistance programs, and that is grants. Grants are free money that, as the homeowner, we don't have to pay back. So the government realizes it can be difficult for us as individuals and families when we're purchasing a home. And they also understand the importance that a home holds for our financial security and our future financial flexibility. So grant programs exist on a federal and local level. So as the consumer, as the buyer, it's important to understand what type of grants exist that we can take advantage of. Because if there are grants that are available that cover a portion of our closing costs or our down payment, it's literally free money that you could be leaving on the table. And a lot of the time, this could be a couple of $1,000s or even north of $10,000 we're leaving on the table. So it's very important to understand the different programs that are out there. If you guys have questions, please remember you can always hit us in the chat function. And then, of course, we went out of our way to prepare a couple of our favorite programs, grant programs that exist for you. And we've made it hopefully easy for you to find out if you qualify or not. Let's jump into our two favorites right now, the Special Purpose Credit Program and then our Home Ready Credit. Okay, both of these programs are offered by Fannie Mae, and one of them is offered by Freddie Mac. Fannie Mae and Freddie Mac are the federal agencies that are behind all of the conventional loans in the United States. So let's jump into the Special Purpose Credit. This is going to be based on a borrower's current location, meaning it is based on whether we live in a particular area that has been deemed as underserved by the federal agencies. Most of the metro areas across the United States are underserved. So if you're living in a big city right now and you want to purchase a home in the near future, chances are that you qualify for this program. Okay, what's special about this program, unlike a lot of grant programs, is that they don't have income requirements. So you could make, $100,000, you can make $200,000, $500,000, and you would still receive a grant to help you purchase a home. Another great thing about this program is the amount that they give you in the form of a grant that doesn't have to be repaid. So if you qualify for this program right now, you will get $10,000 to be credited towards your down payment or your closing costs, and an additional $1,000 that will be used to cover ancillary closing costs such as a home warranty or an appraisal. This is one of the best grants that we've seen in the last decade offered in the US. So if you want to know if you qualify for this program, we've prepared a list of the metro areas that this falls under. So again, it's not based on whether you want to buy in that metro area. It's very important that you understand it's based on, do you currently reside within this area? If you're curious, if you qualify for this program after reviewing the list, again, hit us through the chat function. We're more than happy to, chat with you and tell you directly whether or not you qualify. Next, let's talk about the Home Ready Credit. This is an additional $2,500 that can be coupled with the Special Purpose Credit. This is going to be more based on your income amount. So if you make less than 50% of the area median income, you automatically qualify for an additional $2,500 towards your closing costs or your down payment. And then if you happen to make even less than that, you could be receiving additional $8,500 through this grant program as well. If you're curious what the area median income is, we've created a little link in the body of this course here for you. You can click on that, type in your address. It'll tell you exactly what the area median income is. And then again, utilize our chat function. If you have questions on this, definitely let us know. We're happy to answer your questions. This is one of the more valuable pieces of information you get in this course. Most of us will qualify for this free grant money. So if you're buying a home in 2024 or 2025 or the next couple years here, you should definitely be taking advantage of one of these products. Next, we're going to move on to down payment assistance programs in the form of second loans or forgivable liens. A second mortgage loan is simply a subordinate lien to the first mortgage, and this is used to cover and provide homebuyers with the down payment or the closing costs similarly to a grant. The difference between a second loan or a second lien is that it is repayable over a given period of time. So sometimes you will receive an interest rate or different loan terms on this portion of the loan. However, for a lot of us, most of these programs will be fully forgivable, meaning it will act more like a grant in the sense of we won't have to make payments, and if we can meet certain criteria, the loan will become fully forgivable. So if you don't qualify for free money in the form of a grant, a second loan from a local government is the next best thing to free money. And simply, that's because a lot of these, like I mentioned, are 0% loans. So you just have to meet specific criteria to have them fully forgiven. A lot of the times, you'll have to, just like a grant, meet the income qualification. It will have to, a lot of the times, be less than or equal to 80% of the local area median income. Again, you can use the link to check what the area median income is in your area in particular. And then, of course, you do have to have good credit to qualify for a second lien or a second mortgage. So typically, these types of programs will require a minimum credit threshold of at least 620. To get these loans forgiven, you have to live in these properties and not refinance for a period of time. So a lot of the time, that's going to be anywhere from 3 to 5 to 10 years. So let's simply look at an example. And the example that I like to go through is from our home state, which is simply the Texas State Affordable Housing Corporation, or what we call TSHAC. This offers a down payment assistance program that is a 3-year deferred forgivable second lien. And what this means for you as the consumer is it's a 0% interest loan with deferred payments, which means we're not going to set this loan up to have monthly payments or monthly obligations. It becomes fully forgiven upon the 3rd anniversary of the note date. And it is repayable if at some point during the 3-year period of time, you either refinance or you sell the home. For this particular program, it is credit sensitive, meaning you do have to have a 620 credit score to qualify for this type of loan. And then, of course, you can choose from a 2, 3, 4, 5% that you want to take in the form of a second loan. And this program in particular does impact the rate on your first loan. So if you decide to use a program like this with a second loan, the interest rate on your first loan will sometimes come up by a 1/4 point or a 1/2 point compared to the rest of the market. This is just an example for a specific second loan program in Central Texas, right? So it's important to understand with these programs, they are hyper localized. So the best advice that I could give you is make sure if you want to take advantage of a product like this or a program like this, you qualify your lender. So you will learn more about that in our second course, how to qualify the right lender for you. But again, if you are struggling to come up with a down payment or you want to utilize these second loan programs, they are hyper localized. So make sure you understand who you're working with and that they offer these types of solutions.